Welcome to Mind the Business Radio, the radio show that helps you grow your business. And now, here's Suzanne, Darwin, and Ernie. All right, everybody. Welcome to another edition of Mind the Business Radio. I'm Darwin.
I'm Ernie.
And I'm Suzanne. Thank you for listening.
It's so good to have everybody along with us today, and I'd like to say thank you to everybody for listening to the show and checking out our website. You can go to our website and check out the show and listen to any past shows right there. Our address is www.mtbradio.net. Ernie, so who's on our show today?
Well, today we're going to talk about financial systems, domestic and international, and also investment startups, wealth management, and financial planning. And our guest today is Sean Odumusi. I hope I pronounced that right. But Sean is co-founder and CEO of Dwealth, a company that is creating a robo-financial advisor designed to help people worldwide invest in the American market. He's originally from Nigeria. Sean moved to the U.S. to pursue his MBA in investment management, and since then, Sean has developed a passion for connecting people all over the world using technology. It was actually from this motivation that Dwealth was born. And we're going to hear a little more of his story later on in the show. So, Sean, welcome to the show.
Thank you. Glad to be on the show.
So, when we're talking about financial technology, what are we talking about when we say financial technology?
Yeah, I mean, it's quite interesting. Financial technology spans across various platforms. From payment to investment to even real estate now. It's just basically anything that deals with money and using technology to make it accessible to many other people, or reducing the entry barrier, or making it, affordable to almost everyone. Basically, financial technology is anything that combines the traditional finance world and combines technology and makes it easier for everyone to have access to some level of opportunities that were originally not possible for them to have access to.
So how is technology changing the face of global finances and investment systems? Well,
when you think about years and years ago, which I can't remember specific numbers, when you have to send money from place to place, it's either you send it through people, and then came Western Union and MoneyGram and all those fancy money transfer systems, and it became easier. But now when you think about sending money, you don't even have to get out of your house to send money any longer. With even your iPhone, Apple Messages, Google phones, Android phones, you pretty much can send money from point A to B like in an instant. And so how technology is changing the world of finance is things that used to be harder for people to access, that would take you from having to leave your house, go to a dedicated store or a dedicated place. It's pretty much now bringing it down to something everyone's used to. You really don't have to learn to use it. And it's making it also how technology is shaping finance, because now more people have access to more financial opportunities than they had 5-10 years ago. Adoption of, and even bigger corporations also are beginning to adopt technology when it comes to making it easy for people to manage your finances. You think about also your credit card. Before you had to get a bill that would be sent in the mail, but now it's easier for you to know exactly what your balance looks like, when last you paid, when your due payment comes in, everything just using a mobile app or even their website. And so the way technology is shaping that is, finance used to be pretty much something people had to go learn somewhere, or they had to leave their houses, they had to take 5-10 steps to finally achieve something. But now with technology, it's making it easier for them to do all these things while still doing their daily routine. While grabbing a cup of coffee, you're right there checking the next things you have to do, or checking updates from the stock market, as opposed to before where, you'd have to call a broker. The broker tells you, oh, this is the price. And 10 seconds before you say, okay, buy, it tells you, I'm sorry, the price just went up by $1. So this is the new price. Okay, do I buy or not? While you're still trying to do the analysis, the price goes up again. So the way technology is shaping all of that is it's making almost everything in the financial world instantaneous now. You see even new startup companies coming up with solutions that makes it easy for everyone to invest, makes it easy for everyone to budget, makes it easy for everyone to financially plan their future out without having to involve 5, 10, 20 people, or having to drive 10 miles to a dedicated place to gain access to such information.
It's getting to the point where you really don't have to leave your house. I mean, you can even order fast food and have it brought to your house via your phone. And, in the same instance, you can then go check your stock market and then go to Amazon and purchase something. And you're done.
Yeah.
You can even have your groceries now delivered to your house. So, but all these are separate platforms. You know what I'm saying? So you have to switch from one to the other. That's probably the only work you really have to do. But Correct. It's all right there.
Again, yes, like you said, you have to switch among different platforms, but the switch is lower than before. Think about before, if you had to go send money to your cousin in Arizona or somewhere, you had to go to the store to buy a few things, and you had to get somewhere else to do something else. Now you don't really have to drive from one store to one store to one store, from one location to location. You pretty much just switch around applications. And if you use an Android phone, you pretty much can split your screen into two while you're shopping for Amazon down. You're on Yahoo Finance on the top screen looking at how the market's performing. So yes, there's a bit of switch to it, but it's reducing the time it would take to actually accomplish this task to to a fraction of what it will take as of before. And so just making it easy for everyone to have access to all these things. And also when you think about the onboarding process, before, when you had to open a brokerage account, you'd have to make an appointment with a broker dealer or a wealth management firm. Someone comes around, you talk for 2-3 hours, they send you a big giant pile of paper you'd have to fill. If you've got a lot more money, you would have to probably include your attorney. You would have to go through all those things. Takes a few days. You post it back to them. They probably will tell you to post it to their headquarters. Maybe it's 5 states away from where you live. UPS or USPS will come take the document, send it right there. If it gets damaged, you'd have to. So it's like all those things that will take time and take weeks for you to have access to. It's just, hey, just download the app. How many seconds does it take for you to go to the App Store,
download the app, easier.
sign up from there?
Yeah, because you can actually do your daily tasks in 10 minutes instead of taking 3 or 4 hours.
Correct.
Yeah. You were talking about having your bank account app up at the same time you have the Amazon app up, which is kind of nice because you can, before you purchase that case of wine on Amazon, you can make sure that you have money in the account, That's over just maybe 7-8 years ago, you weren't able to really do that. Today it's everything. I just flashed on this because it was a few years ago that there were stores trying to deliver groceries to you, and this was probably in the early 2000s or something like that. But all that failed then when people were setting all that up so you could have all of this at your fingertips on your computer. But now they're doing it again, but now it's successful.
Yeah, again, that would have happened. It's also the same reason why right now thinking about Dwealth in most parts of the world makes sense, as opposed to if I thought about, hey, this is a great idea 5-10 years ago. It's like nobody cares about that because it's impossible. Now the technology infrastructure it's catching up to that, and so deploying all the services, it's easier than if you try doing the same thing 5-10 years ago. I mean, maybe 5-10 years ago, if someone had the foresight of building almost all the technology that's required to get this going 5-10 years ago, and they did that, then yes, it might have worked out fine. But without the proper infrastructure, it's impossible for that to work. I mean, when you think about like space, the race to the Mars right now, if 5-10 years ago you thought, hey, this is possible, and certain materials or certain sort of technology or certain things that were needed to build rockets, especially like SpaceX reusable rockets, was impossible before, but due to advancement in research, advancement in technology, those things are becoming possible. So sometimes it's just all about the timing. With time, technology improves. With time, human knowledge advances, and certain things that weren't possible before turn out to be possible now. It's just a deal with time and letting technology also advance and grow, because technology is basically not stagnant. And also some things could be thought of right now but might not be achievable right now simply because of I don't know what word to use for it, but it's just almost impossible. But when it advances to that level, then yes, things like that might be very possible. So it's the same thing with also technology and finance. Like things that weren't possible 10 years ago are possible now because we've got the infrastructure to back up all what we loaded on those services now.
That's great.
All right, everybody. We're going to take a quick break, and we're going to be back with Sean in a few. You're listening to Mind the Business Radio. I'm Darwin.
I'm Ernie.
And I'm Suzanne.
And we'll be back right after this.
Does your business sell products or data to customers in Europe? Do customers from the European Union stay at your hotel or bed and breakfast? If you answered yes, then a new international law applies to you. It's called GDPR, and it could potentially bankrupt your business if you choose to ignore it. To find out more about GDPR, go to www.mindthebusinessradio.com and click on the GDPR Turbo Pack link.
Hello, everyone. Welcome back to this edition of Mind the Business. I'm Ernie.
I'm Darwin.
And I'm Suzanne, saying hello to all of our friends in Northern Ireland. Thank you for listening.
And today we're talking with Sean Odumusi, who's the co-founder and CEO of Dwealth. And we were talking about financial technology in the previous segment. And now we're going to ask him questions about the international markets and systems. So, Sean, how do international financial systems and markets differ from the American financial systems and markets?
I mean, that's a great question. Not so different. Just that certain things are not I won't say possible, but are not offered in some markets, like they're offered right here. So, like the idea of bonds, stocks, trading commodities, derivatives. Those owed, especially in Nigeria, those are things that exist. Maybe commodities not so much. Besides crude oil, we don't really sell other things like that. But yeah, that's still possible. Like when you think about the concept of credit, that's almost it's almost unachievable right now. Not really unachievable. It's just something that doesn't exist. That also is due partly to the culture of the country, and some developing countries and many African countries are like that. The concept of, like right here where you hear people talk about, oh, you've got to live debt free. I mean, most parts of the world, especially in developing countries and countries in Africa, Nigeria for example, debt free isn't even a statement, simply because you can't even get into debt to begin with. The idea of so the idea of having a credit card doesn't exist. There are some banks that
really
issue you a credit card, but it's almost like a secured credit card. For you to get $1,000,
you have to put $1,000 in.
You have to put a deposit of $1,000.
Okay.
So how very different.
Again,
I guess that makes it easier for you to buy online then. That's... Yeah.
I mean, buying online, you can just use your debit card. You don't need a credit card for that.
Exactly. Wow.
Plus, there are some cultures that are just cash only, right?
Yes, Nigeria is an example of that. So you're buying a car, it means you have the money for that car. It's not an idea of, there's a monthly payment for that on an interest rate. Interest rate isn't even something we talk about because, like I said, you barely even get the opportunity to go into debt. You only get like loans for businesses and a few things, but it's very limited. It's not something where you can go online and check your rate and see if you qualify for this credit card or qualify for this loan. No, it doesn't work like that.
Wow.
And so that's where majorly most international markets, let's say Africa, Nigeria, for example, really changes from around here because it's cash only and people depend on making money to buy things. So if you're building a house and you have the money to build the house, it's not, I got a mortgage, a 30-year mortgage or a 15-year mortgage, or even a 1-year mortgage if that exists to build this house. No.
Does that work pretty well for Nigeria?
Yeah.
It does, and sometimes it does not.
Okay.
When you think about it in the sense that it works, it simply means people do things based off what they can afford. And so you don't get on so much debt, and so it works that way. And it also works in the sense because when Nigerians, and I guess I was going to talk about this later, but so many countries that have things like social security benefits and things like that. So when you retire, you'd have to, if you don't have money to sustain you post-retirement, I'm sorry to say, but you probably are screwed in a way because there's no government that's going to come help you. No one's going to, even if it's $10 a month, that's not coming from anywhere. And so because of the fact that it's cash only, it helps people save towards those periods of time because now you don't have to get 5 different credit cards that you've maxed out and you'd have to pay in retirement. So in that situation, it works.
Okay.
So they value, they have a different value of money. In other words, they have a different understanding of what a dollar is as opposed to like here in the United States.
Yes, that's very correct.
Wow.
Very, very correct.
Now, I know
the part where it doesn't work.
Yeah.
Okay, sorry.
No, I just know we have listeners in Nigeria and South Africa and a couple of other African countries, but I've be honest with you, I've never heard this. So this is fascinating.
Yeah, I mean, that's the time it works. The other time it doesn't work is like for I wouldn't say but for a small business, getting a loan to buy that equipment or buy the machine could be very difficult. And simply because, like I said, we don't really have the credit system in Nigeria, and so some banks offer loan opportunities, but because there is no system that's like the credit system, the loan opportunities you have are very limited. It's very small, and so sometimes you might only be able to get a loan to buy an equipment to pay back in 3 years or to pay back in 4 years, probably 5 years. But realistically, we know most businesses, when they get loans like that, it's always best for businesses when they can stretch out the payment for like 10 years, especially if it's a small business, because they really might need this money to buy that equipment to generate some level of traction or generate some product that would not necessarily make them money in 1 year or 2 years, but over the long period of time, 5, 6, 7 years, it will. And so because we don't have the credit system, that limitation to cash is bad for businesses because expansion is very limited.
It makes it so much harder.
If I get this loan, I'd have to pay back in 5 years. If I can't make the payment in 5 years, then what happens? The bank comes back and takes the machine and takes whatever stuff you've put up as collateral, and so that could get scary for businesses expanding. But for people, it does work in a way, and it also doesn't work in so many ways, because it goes in two ways like that. It helps people save, and helps people understand this dollar should be valid, because I can't get another dollar from somewhere else easily. So it helps them not even get into debt at all. But yet, when you think about people that want to go into businesses or even venture into different things, very risky kind of businesses also might require some. And again, it's not great to start a business on loans or stuff like that. But if that's the only opportunity, or that's the only means to get some capital you have, that's the only way you've got to be able to start your business. And so you can't really crucify people for starting that way. But again, because the opportunities are so limited, they really can't, really can't benefit from what you can currently have.
So, Sean, is that the way the corporations work also in Nigeria?
Explain that a bit more.
We're talking about like cash systems. Do they operate on a cash system?
Pretty much, yeah.
The corporations? Okay.
Wow.
Yeah, corporations, people. It's majorly cash.
Okay.
That's the point where they meant to say cash is king, simply because you really need cash to do anything. But again, with going back to technology, with technology coming into the space now, there have been so many services over the past 2 years. I wish I could remember their names, but there have been services over the past 2 years now. Startup companies building opportunities for people to get a very small amount of loans, but it's better than what they had access to before. And it also gives them some more flexibility compared to what currently operates with the bigger institutions in Nigeria. And so it goes back to the idea where technology is helping less people in Nigeria have access to loans they didn't have access to 5-10 years ago. It's reducing the concept of going to a bank, standing in line, filling out 5, 6, 7, 8 forms, hoping someone in the bank that's going to make sure that works. Because there is really no credit system, and there isn't really a benchmark on how to guard against knowing or gauge who's going to be prudent with their credit or who's not going to be prudent with their credit. So you just hope someone that works in the bank, like the bank manager and the assistant branch manager, that's going to say, hey, no, make sure this person gets this loan. So it's based off the fact that they like you, they know you, they think your business is going to work out fine, they think your business plan seems sensible. But again, it's not a system that takes a look at historical data. They kind of do, but not really a lot, because many banks don't share information. So if you got a loan from XYZ Bank 5 years ago, ABC Bank doesn't have access to that. So that's where the problem lies with the traditional system. But now with the technology systems, those newer fintech companies operating in Nigeria and even in Kenya, I believe, they are making it easy for people to gain access to loans. And because you do the application on their system, with the newer banks, with the newer startup companies, there are ways by which they share some level of information. So they also can start benchmarking and saying, okay, this person has been smart with $2 over the past 5 years. We can extend $5 to this person. Now we can extend $10. And so that's where technology as a whole is beginning to affect or to shape the market, especially internationally, where systems that weren't possible for them before, they have access to that right now. And Nigeria, Kenya, South Africa, I know those are some of those 3 nations have some of the largest rising fintech companies in Africa as of right now. And I know they make up about 20% of the African fintech market combined, or even more than 20%, maybe 40%, something about that. But it's the largest that's there in Africa. And it's simply making it easier for people to have access to many of the financial opportunities or financial systems they didn't have access to. It's making it easier for them to have access to those things right now. So I'd say generally, the international market is kind of different from the U.S. market, which in the sense of like credit, the options they have with stocks, with bonds, with currencies. Now many people are doing FX trading in these countries, which FX trading before was limited to only the ultra wealthy.
Okay.
But now many people, I do have two friends that run their wealth management firms in Nigeria, and that's pretty much what they do, just FX trading.
Okay.
Unlike before, where it wasn't possible. And again, it comes down to the fact that now some licensing softwares or some sort of technology that wasn't as accessible before, they have access to those things right now. It's affordable for them to purchase or to license these things and the software right now that it was possible for them 5-10 years ago. And so that's how the technology is helping improve opportunities to many of the financial opportunities in Africa. And I know it's also helping the continent of Africa and many African nations. It's also affected their GDP overall now. Certain things people have more higher purchasing power, even though inflation is crazy right now in most parts of the world, in these parts of the world, considering they depend largely on crude oil. But ultimately, it's benefited Africa as a whole. I know Nigeria predicts if fintech grows so much in the country, it should increase its GDP to about 3 trillion or so by 2025. 3 trillion naira, by the way, not dollars.
Okay.
In dollars, there should be a few billion dollars more than Nigeria's current GDP. So it's helping the people right now, but ultimately it's going to help the economy of the nation over the next 5, 10, 15, 20, 100 years.
That's what we hope for.
Well, we're going to take a quick break, and we're going to come back and talk more with Sean. And you're listening to Mind the Business Radio. I'm Darwin.
I'm Ernie.
And I'm Suzanne.
And we'll be back right after this.
Does your business sell products or data to customers in Europe? Do customers from the European Union stay at your hotel or bed and breakfast? If you answered yes, then a new international law applies to you. It's called GDPR, and it could potentially bankrupt your business if you choose to ignore it. To find out more about GDPR, go to www.mindthebusinessradio.com and click on the GDPR Turbo Pack link. Welcome back, everyone, to another edition of Mind the Business. I'm Suzanne.
I'm Darwin.
I'm Ernie.
And today we're having a fascinating conversation with a very smart gentleman. His name is Sean Odumusi, and we're talking about international and national financial systems. And we've been talking about the fact that some parts of the world, yes, you heard me, some parts of the world are still a cash-only society, which I guess, Sean, would make things a little bit difficult. You have to carry all that cash around if you're going to go to the store or if you're going to buy a car. There's security issues with that, right? I'm sure that some people can't carry that much cash. We don't have cashier's checks. We don't have loan documents. Does that create a problem?
I mean, when I say cash system, I simply mean you need that, whatever amount of money you want to spend, you simply have to have that amount of money or more in your bank account, because there's a wide use of debit cards.
Okay.
That's why sometimes it confuses me here when people talk about, give me my debit card. I specifically look at the card and look for the word debit. And then they're like, no, that other card. And I'm like, this is a credit card. This is a debit card. They're two different things.
Okay, right.
But there's a wide use of debit cards in most parts of most developing countries, Nigeria, for example. I can't remember the stats specifically, but I did read somewhere where the adaptation of the use of cards, especially even the PIN-based cards, is wider in Africa than it is in the United States, Europe, and Canada combined. That's simply because we got the technology of cards a bit later, and we got the newer technology with PIN. I've been using PIN since 2000. and 2008. That's when I've been using a PIN card, and it's shocking that even some Bank of America cards here in 2018 still have the magnetic stuff on the back, and they're still telling clients to get the new PIN card. So it's cash based, but we got the newer technology of the cards. And so
so you don't have to run around with a bunch of cash.
Okay, I was worried about that.
No, you don't. You don't. You don't run around with a bunch of cash.
Okay.
All right. Now, Ken, my question is a company, let's say in Nigeria, is looking for money. Can they accept private investors? Is it, instead of going to a bank, can they go to somebody who can privately invest in that business?
Yes, they can. Okay. And I know private equity and venture capital funding in Africa in general over the past decade has increased by, I believe, about more than 100%. Many Nigerian companies right now are raising funds from institutional investors. One is Paystack. Paystack is similar to Stripe. If you know Stripe, Stripe is a payment company around here, and Paystack is simply a payment system in the Nigerian market. I know in August of this year, they still raised about $8 million. And being a Nigerian company, they were able to raise it from international investors. So yeah, for Nigerian companies, they raise international. They raise international funding a lot of times. They're not just restricted to going to a bank to get a loan. They have that opportunity also.
So you really have to be, if you're a new company in Nigeria, you really have to be a lot more prudent about the money that you're making with your new company and where it goes, and making sure that the payments are being made. Other than here, where here, if you start a new company and, okay, you need some more money, you can take out another loan. You can take out another loan. Whereas there, I think it sounds like a person would have to be real savvy about the money they're making and really make sure that their company is going to be successful.
Yeah. For the most part, that's yes is the only answer I can think about. Some of them do have buffers, and so sometimes when they raise money or they get a loan, they make sure there's some miscellaneous percentage in that, which would at least give them some sort of cushion if things don't go right. But yeah, I mean, even organizations here also, this I know in the past few years with venture capital firms, some of them do have benchmarks. If you're trying to raise XYZ amount of dollars, to tell you, once you hit this benchmark, then you get 20% of the funding. Once you hit this, then you get 30% of the funding, which is great because it also helps keep them in check. But yeah, pretty much, that's the only solution for most companies in Nigeria.
Okay.
Earlier we were talking about how their retirement system over there, where they have to accumulate cash throughout their lifetime. So that's like a different form of wealth management and
leave us out,
and financial planning. So, what do people living here in the States need to know about wealth management?
Well, so they have to accumulate a lot of cash, but it almost works almost like your 401k around here. I mean, here people have the opportunity to hire a financial advisor, and wants to start working and help them plan out, hey, now you make XYZ dollars, this is how you should start planning towards the long term, 30, 40 years before retirement. I think that's something that's, again, with technology, many people are beginning to catch on with that. Charles Schwab did a research study some weeks ago and found out almost 70% of Americans by 2025 think the financial management will be left up to robots to do, and using automated robo-advisors like what we're building at Dwealth and other solutions out there like Betterment, Wealthfront. About 70% of U.S. people think that will be left to automation, which is great because, it only helps us understand that so many people are beginning to think about there's probably going to be some time in my life where I can take on 3 jobs, I can take on 2 jobs, I can't even take on one single job. So I'd have to plan towards that part, which is great to know that many people are catching on to that. In the Nigerian system, that kind of operates where you would have to get a retirement account, and it's called a retirement savings account because the way the investments are done is in block form, and that's pretty much my problem, and that's why I thought about there should be a solution by which they should be able to diversify their portfolio. So currently, for like a Nigerian to invest here in the U.S. market, if you don't have $250,000 or about $500,000 or probably $150,000, it will really be so hard for you to get all the required documentation to eventually let you open a brokerage account. It's different from a bank account, but for brokerage account, it requires a lot of information required by the government. Also, it helps wealth managers properly advising what investment vehicles would be best for you. So it's pretty much hard for the average Nigerian to accumulate $250,000. I mean, it's hard for the average American to even get $250,000.
Yeah, it is.
I know.
And so the idea of Dwealth was there are people that can save $10 a month, can save $5 a month, or even more than that. Some of them can go as high as $1,000 a month. Who can provide a solution or provide an alternative to just investing in the Nigerian market? And that's pretty much where Dwealth came about. It was, they can't come here because they don't have that kind of money and get the required documentation easily. They can't do it online also because, again, when you think about Nigeria, come on, someone tells you, can I send you this money so you can do this for me? You're like, 2 + 2. Probably I should call the FBI right now because I don't know who this person is. Yeah. And so it's hard for them to easily get that kind of solution. So the concept with Dwealth was simply because people already do a lot of saving, because you'd have to do savings since there's no government to help you when you retire. And people are somewhat prudent with their money. I wouldn't say they're professionals with managing money, but there's a level of understanding the value of money a bit better in the Nigerian market.
Okay.
So if they're already doing this, then they have their real estate already in Nigeria, their income is in Nigeria, their savings, their checking account is in Nigeria, everything they pretty much have is in Nigeria. With inflation skyrocketing as of last year was an all-time high of 18%. What can be done to help take out just a fraction of the entire investment or their entire financial portfolio and invest it in a different economy, or pretty much provide a cushion whenever the Nigerian economy goes south? At least they don't lose everything altogether. Yeah. And so the idea of Dwealth was just born out of that. Is there's technology, the adoption of mobile phones in Nigeria. If you consider mobile phones were just introduced in Nigeria about 2000, 2001. And as of today, we've got about 70% of Nigerian adults using mobile phone. Okay. Mobile phones, 1 or 2 of that. And so the access to technology is also been on the rise. I know my stats are right. And we've got about 190 million Nigerians, estimated 190 million Nigerians. About 110 or 130 million of those people connect to the internet at least at least once in a year, about that number. And by saying once in a year, it's quite low enough, because I'd say almost daily Nigerians connect to the internet using their mobile phones or their laptops or their tablets. Yeah. And so the goal with Dwealth is provide a solution that makes them get the same opportunity you get around here. So around here, where you can download an app, create a brokerage account, and from there you run in the same concept as what we brought is build something that would enable them download an app also, get all the required legal documentation in the background, but almost immediately start investing their funds for them. And by doing that, we simply are taking a fraction of their portfolio, which they're already prudent with, and we're taking it to a different market. So at least you have a cushion in case one market goes south, you still have the other one. And in case it's this market that goes south, least you've still got a chunk of it in the Nigerian economy anyways. And so that's pretty much the goal, is enabling them get the same opportunity they would have gotten if they were to be U.S. citizens, but streamlined towards the Nigerian market.
Okay.
And so I'd say Americans already are doing a good job with wealth management and with fintech companies bringing on different alternatives. There's now Robinhood, where you can trade stocks for free. There's Wealthfront, there's Betterment, that gives you financial advice for a fraction of 1% that a traditional wealth manager might take. A lot of people considering, I better start thinking about my retirement, about either my 401k or IRA. We're doing a good job with that, and it's pretty much increasing day over day, year over year. Mm-hmm. And if that's not even evident enough, when we take a look at all those newer companies having signups, especially from younger generation, it's staggering. Remember, before you get only a fraction of millennials opening a 401k or an IRA, but now it's higher than what used to be a fraction. So I'd say we're doing a great job at increasing that, but it's just also companies also considering internationals and looking into the international market and seeing how they could tap into that, because yes, they might not be as wealthy as they are here, but they are $10, they cherish it so much, and they are doing a great job at keeping whatever thousands of dollars they make in a given year.
Okay. Wow. All right, everybody. Again, we are talking with Sean, and this is just a fascinating discussion, and I'm so glad that we have you on the show. We're going to take a quick break, and we're going to come right back, and we're going to continue our conversation with Sean.
Does your business sell products or data to customers in Europe? Do customers from the European Union stay at your hotel or bed and breakfast? If you answered yes, then a new international law applies to you. It's called GDPR, and it could potentially bankrupt your business if you choose to ignore it. To find out more about GDPR, go to www.mindthebusinessradio.com and click on the GDPR Turbo Pack link.
All right, everybody, welcome back to Mind the Business Radio. Ernie, why don't you tell everybody where they can listen to our show?
Well, there's so many avenues, but here are the main ones. They can listen to this show and previous ones on mtbradio.net. They can listen to us on iHeart, Spotify, iTunes, and many more.
TuneIn. I think we're on TuneIn right now.
Thank you, TuneIn.
Yes. I know a lot of them. So, Ernie, are you ready to retire?
Not really. I'm going to open up my Dwealth account.
Yeah, right after the show.
Okay. Yeah. It's this has been a fascinating show. Sean, I'd like to ask, what do entrepreneurs need to know about starting a company in the fintech or investment sectors?
I think I'll steal a page from a VC I met a few weeks ago. Moody Hurd, I believe Moody is part of his name. But it was one thing he said is, especially when it comes to financial technology, understanding a market and understanding that market very well, because a solution or an idea might be great, but if you don't understand what market you want to deploy it to, it just might not be worth venturing into something like that. So yeah, understanding the market and understanding that market, the target market, great, is the very first thing. It was like, yeah, as long as you have that figured out, then you can move on from there. Yeah, his name is Moody Hurd. He's an analyst at Mercury Funds.
Okay.
Yeah. So if you're starting a fintech or an investment company, I assume that's going to take a lot of capital. So is the venture capitalist the way to go?
I wish I could give I wish I could give a great answer on that. I don't know, considering Dwealth is also still fundraising at this stage. Just beyond the MVP and also beyond the potential partnerships we have. We're still going on fundraising. So I maybe 2 months down the line, I come back, then I might have an answer to that. But for now,
okay.
We'll have you back on.
I'm just trying.
So you're living.
Angel investors, VCs. We're looking at considering crowdfunding, or we're looking at using Reg D to raise some kind of funds. But that answer, I don't have an answer to. I mean, that question, I don't have an answer to now. But 2 months down the line, I'm pretty sure I'll be able to say something about that.
Okay.
So Dwealth basically is a platform where it allows opportunity for people in like Nigeria, in African countries, or anywhere in the world to invest into foreign markets like the United States, and it makes it easier for them to do that. Am I correct?
That's correct.
Okay.
Simply because there's a lot of things we do in the background for clients. So when you sign up for an account, for example, let's say you download a trading account or an investment account of sort. You fill the forms, you put in your social security number, they tell you we've got your form, we'll let you know when it's approved, right? And so what they do in the background is either the company or the clearinghouse or whoever is in charge of that, they do a background check and make sure this person is this person probably makes XYZ amount of money or makes within this range. This person is not fraudulent, this person isn't on the OFAC list or the anti-money laundering list. They do all that in the background, and then maybe 5-10 hours or the following day you get an email saying, bling, your account has been approved, fund your account and start trading. That's it. But for these non-US citizens, they can't get that access because once they've put in their name, put in their address, I mean, they can even put in their address, because some of them won't even allow non-US addresses. Once they get to the social security number part, they don't have one, so they can't move forward. And some organizations will let you call in and ask you a few questions. If you're in the United States, they can apply for an ITIN on your behalf and do all that process for you. But if you're not in the US, they can't do that application for you. And that's where, that's what we see ourselves as being different, simply because we're not just going to be a US-based company. It's still going to be here. The application development, the financial investment team is going to be here. But in whatever region we're expanding into, we're setting up, I would say, a store, but just an office. And that office does all the compliance stuff with the local registration. So when it comes to plugging into the local database, that's what the team in Nigeria is going to be doing. And to do the background checks and all that required documentation in Nigeria, that's what the team in Nigeria is going to be doing, coupled with the fact that we're using technology. And so we're using technology to integrate to many of the databases we plan on integrating to access the information we want to access easily and faster, and also do the verification faster. But the fact that we have an office in the local country helps us understand their regulations when it comes to like taxations, and which is also beneficial, because if you want to advise someone on an investment type or invest on an asset class, you want to know exactly what it will look like whenever they have to pay taxes on it, and even also what it will look like if they have to pay taxes here. And so in the background, what we do is the ITIN application. It takes about 6 to 9 weeks for that to be approved. Now, do you want someone to sign up for an account, wait 6 to 9 weeks for the account to be approved before they finally get to use it? No. And that's where Dwealth is different, is because we're taking some level of risk with that. Because we have the background information about the person, we do the application, we can instantly create an account for the person. And there will be some restrictions, which it's still going to be defined once we launch. But there will be some restrictions as to people that have the application pending. What can they or can't they do with their account? For sure, definitely, they won't be able to withdraw their funds if during the process, the 6 to 9 weeks where the ITN is still being processed, simply because there is really no information the government can use to say, okay, we know this person had capital gains or capital losses or made some dividends, so this person can pay Uncle Sam his required number of money. But again, it's just within that period of the application process, there'll be some restrictions. But thus, what we do in the background is what makes it different, simply because we can connect with the local country and connect with here in the United States, get the required documentation here in the US based off the fact that we know the person so well from all the information we're able to gather, which no other organization right now has access to.
Okay.
I mean, especially when we talk about Nigeria or even many African countries, that's our goal, is plugging ourselves into the financial system in these countries and also into the financial system here, whereby we can easily communicate with whatever country that person is signing up, get the right information and help the person create something they couldn't otherwise have created. And that's where technology helps us speed up the process. So the process of opening a brokerage account, like I said before, for a Nigerian that even has like $250,000 could take between 3 to 6 months. And we're reducing that from 3 to 6 months to an average of 3 days, simply because we can get a lot of information from the local country without having to wait for someone to send it. People easily just sign into accounts and sign into their bank accounts, do all the verification online. We do the application here, and we can also reduce all that to a fraction of that, which is about 3 days, simply because we have what we do in the background. We have some requirements they'd have to meet during that process, but doesn't mean their money doesn't start working for them immediately.
Oh, wow. So what this does is it just really opens the door to investing in other countries and have people from other countries invest in our startups here or whatever, which is, I mean, it just makes
it's
it
opening
easier.
a door.
It opens the door. So anyway, we're going to take a quick break. Sorry about that. And we're going to be coming back, and we're going to be talking with Sean some more. So you're listening to Mind the Business Radio, and we'll be back right after this.
Does your business sell products or data to customers in Europe? Do customers from the European Union stay at your hotel or bed and breakfast? If you answered yes, then a new international law applies to you. It's called GDPR, and it could potentially bankrupt your business if you choose to ignore it. To find out more about GDPR, go to www.mindthebusinessradio.com and click on the GDPR Turbo Pack link.
Hello, everyone. Welcome back to this edition of Mind the Business. I'm Ernie.
I'm Darwin.
And I'm Suzanne.
And we've been talking with Sean Odumusi, who is the CEO and co-founder of Dwealth. And we were just talking about Dwealth and the small investments people can make.
Yeah,
I like small.
I like small investments.
So, Sean, could you tell us how you started Dwealth, and then maybe later on let people know how they can open up an account?
Yeah.
Yes.
Well, for now, people can't open an account. We're still in the development stages, but
okay.
I mean, again, once it's open for people to have access to it, we'll definitely let people know. But starting Dwealth was quite interesting. I mean, my background was in computer science, and I just recently graduated my MBA in investment management. And so upon graduation, before graduation, 2 years ago, my mom died, and so I had to go back to Nigeria to do some shuffling of accounts, move from one financial account to another, especially to put it in my sister's name. And that's where it came up. That's where I just saw the roadblocks to many opportunities that could have been provided to many people in Nigeria. And it baffled me because firstly, it's a lot of paperwork, which is annoying. I hate paper. I barely can stand. I mean, if someone gives me a piece of paper when I'm out, and before I finally get to my car, I've kind of trashed it off, put it somewhere, I can't remember. And so I don't like paper, and I was like, whatever I want to do, I don't want to include paper in it. I want to make sure it can be easily done from the same device you used to play games, the same device you used to communicate with friends. And so after she died, and I discovered like many people didn't have access to investing outside their home countries. I mean, we believe at Dwealth, it's about 90% of the world's population can invest easily outside their home countries. And 90% is about 6 billion people. And even though they're not so wealthy, they manage an average of $4 to $6 trillion in a given day, and they still can invest here. And so the goal was, how can that be reduced to something quite minimal, lower than 90% of the world's population? And so the idea of Dwealth was simply because my mom died, I couldn't do a lot of the asset transfers easily, and I was taking a look at a retirement account, and I was just surprised at what the value was after 30 years. I was like, really? After 30 years of sinking this much money into it, this is the total value? It's just so ridiculous. Mm-hmm. And so my goal was, well, if she faced that, then there has to be a solution that not every other person coming up in Nigeria or any other parts of the world would not have to face. They should have alternatives. They shouldn't just be limited to Nigeria alone, or even just Africa alone. They should be able to open into different markets. And based off the fact that they don't make the same average household income, like the average household income here in the U.S. is about $55,000 for this year or last year. I know the average household income in Nigeria runs $26,000. Mm-hmm. And that puts you in the middle class already, which is quite surprising, right? You hear 55,000 here and you're barely in the middle class. For 20-something grand, you're already in the middle class. And the goal is that might not be considered a lot of money, but that's what they worked for. And so how can that also at least not take everything out of the Nigerian market, because Nigeria needs to grow with its own services and products, but provide the average person an opportunity outside the Nigerian market, which the billionaires and the millionaires have access to. And so that's where the idea of Dwealth came in. It was just from my mom's passing, for me seeing a problem, not seeing a solution for them as of that time. And it's like, yes, I've got to be something that would enable these people have an opportunity outside Nigeria.
So, Sean, if they only make $26,000 a year, which sounds like a tiny little bit to us, but to them is a great deal, I'm sure that they can't afford to invest most of it or half of it. They probably would have to invest a tiny little portion. How much, when you get your system up and running, will they be allowed to start investing with? $1?
Well, the goal is to have the minimum set at $10.
$10.
Oh,
that's
okay.
affordable. Yeah.
That's not bad.
Yeah, I mean, when you think about $1, that could involve a lot of trades and could involve a lot of cost on Dwealth itself, on Dwealth also, which is great. Maybe 10 years down the line, if there's lots of revenue, then we can bring that down to $1. Okay. I mean, eventually they can. Technically, they can start with $1, but when you think about the trades associated with buying securities, and because it's fractionally owned, it means Dwealth basically has to buy the entire security off the market, and we redistribute it into fractions for each client. When you think about the cost associated with that, the reason for doing it for $1 becomes very stiff.
Okay.
Yeah,
and so,
exactly.
The goal is to start with about $10 minimum.
But $10 is affordable.
It's not bad, yeah.
No, $10 is yeah.
Yeah, I mean, that's pretty much what we thought about. And because also they can own fractionally, it means their money goes to work immediately. So they don't have to save up to $200 before they can buy shares or ETFs of different asset classes. But with $10, with fractional ownership, that $2 gets to work immediately. Okay. So nothing is just lying in your account, dormant, doing nothing.
You know, Ernie owes me $10. So maybe I can invest it.
I don't remember that.
Even we can afford $10.
Yeah, we can afford $10.
No, I think this is a fabulous idea, Sean, that you've had. When do you suppose that it will actually start? When do you think you'll be working through all these little problems? What is your target date?
Well, our target launch date is summer of next year. Okay. It's also one of the reasons why we're actually gearing towards the very first seed round, raising our seed round. Like I said, I've been talking to a bunch of angel investors and venture capital firms, but we are hopeful we'll be able to close the round late December, mid-January, and which would also enable us to expand the team. It's just myself, my co-founder, and Dana, the developer, but just expand beyond that. And also we've got some partnership prospects in the works in Nigeria, because we don't plan on just going business to client. We also plan on going with business to business, and so we've got a lot of that in the works.
Yeah,
we've
it takes a lot.
Of potential users also, and so the goal is raise the seed fund, increase our team, and eventually go for at least a local rollout in summer of next year. The Nigerian rollout, we estimating that will be December of next year or early 2020.
All right.
Okay,
go ahead.
So how can they find out more about Dwealth?
Well, we do have a website. It's mydwealth.com, mydwealth.com.
Okay, and then they can go to the website. Can they sign up, and then you can send them out emails on updates and stuff?
Oh yeah, I mean,
cool.
We encourage so many people to sign up to the Dwealth, and they get updated on what's happening at Dwealth, what new things are coming into Dwealth, and whenever we reach certain milestones, we roll it out to our subscriber base, so they get informed of what's going on.
So everyone, go to Dwealth.com.
No,
mydwealth.com.
Mydwealth.com. I'm sorry.
Yeah, like my.
Yeah, and sign up.
Oh, this is fabulous.
Yeah, because this is just
what a wonderful idea you've had, and thank you for helping the rest of the world join the financial system that we all are used to. And I'm so glad that you've joined us today to explain about how the rest of the world has to save money. And thank you for being a light on the hill, a shining beacon, so you can help people in Africa join the rest of us. Thank you, Sean.
Thank you so much for having me.
Yeah, it's been a great show, and you know what? Maybe we can do another update in a few months with you. Have you back on to see where you're at.
I'll be excited to do that.
Alrighty.
Yes, and when you start, boy, we're going to have you back on the show.
Yes.
I know. See how that rollout went.
I know 3 people here that have $10.
$10, absolutely. We're going to invest.
So that's great.
Okay, I'll loan you $10.
All right. Okay. So anyway, everybody, you've been listening to Mind of Business Radio. I'm Darwin.
I'm Ernie.
And I'm Suzanne.
And we were so happy to have you along with us today, listening to this great episode with Sean Odumusi. And it was so nice to have you here, Sean. Thank you very much. Everybody, you're welcome. Everybody, we're going to take off and end the show right now. And sorry to do that, but, it's just the way it goes. So we'll catch you next time on the radio. You've been listening to Mind the Business. Mind the Business Radio was produced in association with Taylor Pacific Video. Copyright 2018.